What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol TSLA for none other than Tesla. What do we have? On the left-hand side, the daily time frame, and on the right-hand side, the 30-minute intraday time frame. On the daily, you can see we printed a hammer candle here, indicating that we did fill the gap, so just be mindful that here was today's open, here was the prior day's high, we filled that gap. However, underneath us, this gap still remains unfilled from the stock split announcement, so be mindful of that structure underneath us. Is it a short trade here to fill the gap underneath? Not yet. Not yet. I don't think it's a long trade either, noting that our risk-reward profile is not favorable to the upside. What are you going to do? Are you going to take the break of this resistance right here to get us into that 1200 number? Maybe it pans out that way, but where does your stop loss go, right? We're talking about a 5 to 10 day swing trade type mentality here. Where's your stop going to go? Is it underneath today's low? That already is very close to, I don't know, let's call that a 1.5 to 1 risk-reward ratio. Okay, if you're using today's low, you may as well use the bottom of the gap because we know there's basically no structure in there, and it should act as a magnet, right? Something that does that, 1054. So what does your stop go here? Now this is your risk. Oops, let's draw that a little better. There we go. And this is your reward. Now you're very quickly approaching a 1-to-1. Okay, if we break into the gap, you know that it should fail fairly quickly, and maybe there's some support at the gap fill around 1022. So okay, what does your stop go underneath there? Now we've quickly just inverted our risk-reward ratio. So that doesn't really make sense chasing it long up here at the highs. Don't get me wrong, the chart is getting two-sided price acceptance, back and forth trade at these highs, which is a bullish indication. But because the risk-reward profile isn't there, I would say from that swing trade perspective, somewhere between 5 and 10 days types of holds, it's not really making sense to go long Tesla at these levels. It's also not a short, as I pointed out earlier, because this is two-sided price acceptance. That has to be more bullish than bearish. Instead, I would focus on the short term here only inside of Tesla and watch something that looks like this. Here's your support trend line. It's clearly the low of the gap up day. It's the low of today's pullback. We support there, and now it's getting some consolidation higher. So as long as we're above the support trend line, maybe it's a decent opportunity for short-term scalps. And by scalps, I'm referring to something that might last 5, 10, 15 minutes, maybe an hour at the tops. That could be an opportunity to the upside here, but I wouldn't overstay your welcome to the long side, right? You can trail your stop loss up higher. That's fine as and if prices work in your favor, but I wouldn't be, making some sort of trade structure here where you're looking for 1200. It has to be hit and you're putting a stop loss down here. As we've walked through, that simply doesn't make sense. It also doesn't really make sense to be short Tesla right now, just currently because we're above the support trend line. This gap is holding. The reasonable short I could see taking is, okay, this breaks the support trend line. That's fine. If we approach the top of the gap and put in some sort of lower high, an H pattern, if you will, so lower high from here to here, equal lows at this level, top of the gap, boom, we break into it, the gap should fill down towards 1022. That's a reasonable short trade to take that through here, this range, because there's virtually no structure. We know that, right? So that's what I'm thinking about inside of Tesla in the short term. Upside levels, again, we don't really have anything off to the left, so monitor for continuation. If we do get some sort of break up and over 1115, be sure to trail your stop higher. It could obviously turn around for a more aggressive pullback at any point in time, and you don't want to be subject to taking a loss. So be diligent trailing that stop higher if you do take the bullish break here. If you're looking for the short, patience is required, trying to play for this range down below. That's ultimately going to wrap it up. Actually, I suppose one last thing we can discuss is the Fibonacci retracement now from the lows all the way up to the highs is coinciding beautifully with the container bar low from the double inside bar setup, right? So that's roughly 980. I wouldn't really want to see Tesla much further underneath that to remain bullish in the long term on this particular move right here. Ideally, consolidation happens, and then over the course of time, we can continue to the upside. So that's going to wrap up Tesla. If you enjoyed today's video or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.